Okay, Mike here. Some really interesting things are going on in the gold market. As you know, gold last made a major top way back in 2011, had a big decline in 2013, and is now basing essentially. And I think it's going to break out to a brand new bull market. Now, last time it was in a huge bull market was from 2009 to 2011, and before that 2002 to 2008. And the gold price has tripled and doubled during those times, or more than doubled. A huge gain. So that's why it's important to be ready to know when we're in a new bull market again. Now, what I do is divide the market up into 4 stages. And stage 1 is a base, stage 2 bull market, stage 3 topping market, stage 4 bear market. And you can look at the moving average and the market's relationship to it to understand what's going on, and then you position yourself accordingly. So the best time to buy is when you end stage 1 and go into stage 2, because then you can hold for typically 3 to 5 years and just make a killing. Now, at the end of the bear stage, what happens is the rate of descent of the moving averages really slows down. They start to flatten out. And I think we're right here where we're bumping up on the moving averages and in a transition period. Let's make this more clear so you can see what I'm talking about. And zoom in. Then we'll look at the mining stocks. So here we are. The moving averages have flattened out, and we did get briefly above them for a short period of time in January. Came back down, but here we are now consolidating right below the 150-day moving average. It was at 1208. The 200-day moving average is at 1227. So I think a break through those two levels will mean the transition's quickening. And then once we get above 1300, I really do think this 1230 is the key level that will kick off the start of the next bull market. And I think we're just going to float around below that for a few weeks and bust out through it to complete the transition. However, you want to be absolutely certain. It will take, if you look, we've been making slightly lower highs here, break through the 1300 level, which is the last high in January, and it'll be undeniable. I think it's at that moment that people will start to really get interested in gold again. But those who position ahead of that 1300 blast off will be the people that get in really early, really cheap. And I think we're in that period where we're just fueling up and getting ready. It may take a couple of weeks for it to happen, but look for this 200-day moving average to be broken. Then you pretty much know, okay, we're in a new bull market now. If I haven't bought anything yet, I need to buy. And then you can know after that, once we get above 1300, then even other people will start to recognize the reality. It's the same story for the HUI mining stock index, which is really important because it's actually performing better than the price of gold right now. It performed worse during the bear phase, which is what happens because the HUI tends to lead the action in gold. So when it's performing better than gold, that's a positive for both. And today, indeed, the HUI closed right below its 150-day moving average. Let's zoom into that. And you can see how 180 and the 150-day moving average is now acting as a short-term resistance area. Longer-term resistance is at 192. And essentially, if we go through 192 and 200, we're in a new bull market. It's as simple as that. And it's going to happen. It's just a matter of time. So I just wanted to update you on what's going on in gold. And I want you to keep your eye on these levels and not fall asleep on the game here, because I know they're not talking about gold on television anymore, probably at all in the financial media, because really people as a whole are more interested when things go up for 5 years and not when they think nothing is going on. Well, something big is going on. We're getting ready to go into a new bull market. Let me show you one other reason why I think that's the case. I know that there are gold bears out there many people calling for drops, in fact, to $900 or $800 an ounce. They're mistaken, and this is why. This is the Commitment of Traders report. It shows that small players in the gold market are only net long now, less than 4,000 contracts, around 4,000 contracts. Now, typically, at the last gold top last summer, let's say, there were net longs like 15,000. I think it was about 17,000. So they have a very tiny net long position. They just don't have enough gold to sell. So with no gold owned by the masses in the futures market, you're not going to ever see a gold crash. At the same time, commercial gold players, and these are the people that are mining companies or hedgers and so forth, they're only net short around 105,000 contracts. Key gold tops, they're net short at least double that, sometimes triple, quadruple. So it's just the Gold Commitment of Traders report, what's going on, is not indicative of some big gold collapse coming. And with that knowledge, you know that we're basing it's just a matter of time. And I'm going to keep you appraised of what's going on. We're not going to take our eyes off these numbers and these levels at all, because gold is going to be a huge play for us going forward.